Hello, this is the TradeSite US Stocks and Futures Market Preview for the week beginning Monday, the 27th of January, ending Friday, the 31st of January, 2020. Hope you had a good trading week. It was an interesting week. It was a fairly flat week until Friday, really. A couple of false starts that made for some boring days. Also, it was only a 4-day week. Remember, Monday was U.S. markets were closed for Martin Luther King. So it was kind of flat. I did already post the stock report for Monday with the calls because I wanted to look at the scans before I did this, just to see what we got. And you know, it's interesting. The long side, we're not seeing as many stocks come up in the scans as usual. Everything's just way too extended. We know that. The short side, you haven't had enough time for patterns to form, but the scans are starting to get closer. They're giving us some of the indications. The way our scans work is that we don't just magically run a scan and it gives us the 5 or 2 or 12 stocks that we post in the report every day. It gives us a lot more than that, and we have to go through manually and take a look for the patterns. So I would say we got almost 500 picks in the scans, called potential picks or setups. 100 of those were on the long side, 400 on the short side. So that's what's interesting is we're starting to see some shorts. Some of the indicators come in line for shorts. We're not seeing the patterns yet 100%. So there are more shorts in the report at 4 of them versus 0 on the long side. We'll call the rest intraday as usual, but we are starting to see that now. I thought that was interesting. Remember, the bull bear numbers were off the charts this week. The bull numbers way up to 45, which is so high, usually bad for the markets. And then let's get to the technical side. Here's the ES front month futures contract. It's the daily chart of the broad market futures form. And we know we got a 13 sell signal on the daily at the end of the prior week. And then we had that Monday holiday. And then we just kind of struggled up against that area for a couple days until finally we started to roll over on Friday. Now, the thing to keep in mind is not only do we have this 13 signal on the daily, and the last one ultimately led to a pullback in late July, early August, as you can see. But if we look at the weekly, not much there, almost to a signal. But the main one is the monthly. Now, this is what's important. We've got a 13 cell signal on the monthly that actually occurred in October. Once you get that signal, you can still go all the way as high as the risk line. And the rule is, right, for the signal to be violated and break, meaning it's no longer a sell signal, you need to close above that risk line on the time frame that you're on, and then take out the highs of that candle the next candle. So what would have to happen here? This is why this is so important. That risk line is at 32.55 exactly on the ES. Okay, so we've been higher, we've been over 3,300. We're now back down to 32.93. We have 1 week till the monthly candle closes out. Next Friday is the end of it. If we're under 32.55, then the risk line has not been broken. We've not closed above it on a candle yet, which is exactly what you would kind of expect. We see this all the time with this stuff. And it's interesting because we got the daily chart sell signal. It's not very hard for the S&P to fall 38 points by next Friday or more and keep that signal in place. However, if you do close above the risk line, above 32.55 next Friday, then you need to then take out the high of this January candle to negate that whole sell signal. So it'll be interesting to see how this plays out, but you kind of get the feeling with the daily chart sell signal now in place and with the flu thing coming out of China, we might actually see that, and that would be kind of weird, right? Because it's going to force the technicals to stay in line like they should. And remember, if this signal really starts, if we start to get the roll, then your static trend line's in play, which is the red line back at 2,000 on the S&P. So that's a 33% correction potentially just to fulfill that sell signal. Now, there's other ways to fulfill the sell signal without going all the way back there, but that is something to keep in mind. This is a big deal on the monthly chart when you get it, and especially when you get two. We've had two over a certain period of time. The second one's usually even more likely to work if the first one didn't. So that's exactly where we're at there. The last one on the daily did work though, so that's it. Let's take a look at some of the major daily charts. So crude oil is also dropping down $1.39 on Friday to 54.20. That's good for gas at the pump. It reached its high when we struck Iran's guy. We got gold up $5.90. S&P cash loses $30.07. You can see the 13 sell signal, obviously the same here as it is on the futures. Um, NASDAQ 100 missed the 13 sell signal by 1 day. So in other words, had we gotten one more higher close, we would have had a 13 sell signal on the NASDAQ as well. Sometimes you just don't get it, but that's fine. It doesn't mean that we're not close enough, especially with the broad market there. So SOX closes down 21.34, and here's what's interesting there. The SOX has a 13 sell signal in place. So the S&P and the SOX both have sell signals. The NASDAQ 1 day short of one. Biotech's already rolling over, breaking the lows of the last 2 months. Russell 2000 has not gotten off to the strongest start. Almost got to a 13 sell signal and has not, but has not gotten the biggest start ever for January. Usually that's when it picks up. The VIX, though, this is the thing. Look at that downtrend line. You can see the very clear downtrend line starting back in August. Just take the top of all those candles and take it down. We sort of breached it on Friday, but we haven't closed above it yet. But that's going to get real interesting if we break that trend line on the VIX. You see the market roll over and the VIX shoot back up to the high 20s. This is going to get kind of interesting. The trend closes at 2.50. That's our 2.48. That's a pretty big close on the trend. Puts the 10-day at 1.24. NASDAQ volume 2.6 billion shares on the day down. So again, the down days, the bigger volume, the up days, not so much. Advanced decline ratio on the NASDAQ, boom, negative 1475, lowest since back in October. On the New York, negative 1142, not good either. Google finally giving some points back, down 1852. Apple down 92 cents only. Once Apple breaks that moving average, I think that's going to be the thing, right? Then the next thing on Apple will be that red static trend line is a target at 280 from where we're at here. And of course, if Apple's going to drop 40 points, it's been a big piece of the NASDAQ move for sure. Netflix up $3.56. Amazon down $22.94. Never really got to all-time highs. Tesla, which has just been the other part that just keeps moving, finally down $7.38. Even though the shorts have been squeezed terribly, you got to assume that they're going to get a little support here if the market rolls over. Facebook down $1.82. We made money on Friday on Facebook. Good money, actually. Goldman Sachs down $3.66. TLT, the 20-year bond ETF, up $1.14. We do have a Fed announcement this week. The Dow Jones only on down 170, but nobody that takes the market seriously stares at the Dow anyways. All right, in terms of intraday action, let's look at the week. Now, remember, we had a Monday holiday, so the very edge of the chart on the left is the Friday close. Monday was not a half day. It was a closed market day, but the futures technically open for half of it, even though there's no volume in it. So Tuesday we gapped down a little, filled the gap, and then tried to make our way back down to where we had opened, closed a little bit negative. Wednesday we gapped up, tried to push out to the highs, and that failed. Came back and closed even for the day. So those 2 days were kind of eh. Thursday we looked like we thought we were starting to see, we were looking at that 13 sell signal on the daily, and we thought we were starting to see it. So we gapped down and pushed lower, sharply lower early. And that's when we thought, okay, here it is finally. We're going to get this move. And then instead we recovered back to even for the day. Which was kind of disappointing on Thursday, so we didn't really do much because that wasn't really what we were looking for. And then Friday, we finally got more of what we're looking for. So we're starting to see that rollover. There's the down day on Friday. The whole week ends up being negative, obviously, because of it. NASDAQ side, remember, the NASDAQ was actually significantly higher on Friday's open. That was the high of the week versus last Friday's close, but it ended up closing just slightly red for the week after all that. So lots of interesting stuff happening on the technical side. We will see how it plays out, but there's just so much. You got to think that this doesn't look good short term, or even with that monthly signal, for a few months out at least, some kind of a pullback in order. Let's take a look at the economic data coming out this week. So we've got new home sales at 10 a.m. Eastern time on Monday, durable goods at 8:30 on Tuesday, S&P housing price index at 9, CB consumer confidence and Richmond manufacturing index at 10. Wednesday, we've got the goods trade balance and preliminary wholesale inventories an hour before the bell. Pending home sales at 10. Crude oil inventories at 10:30. Fed announcement at 2, so that's a 2-day Fed meeting. Keep that in mind. That'll slow the market down for a bit. And then the big one Thursday is the first look at GDP for the fourth quarter. That's the first one, so that's the big one. Only expected at 2.2% growth, which is not hot. Unemployment claims, 215K expected. That's the initial claims number. We've also got the continuing claims number at the same time. Natty gas, an hour into the market. On Friday, core PCE price index, employment cost index, personal income and spending, Chicago PMI, and then the revised University of Michigan sentiment. So there's a lot of data to come out this week, but again, it's all these signals and just the signs. We're seeing some of the internals looking a little uglier. Obviously not helped by perhaps the situation in China, but that by itself is not the reason here. We've been getting these signals lined up prior to that. So it could be a very interesting week. And hopefully the markets get interesting again, as Rich has been saying in the lab. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.